Welcome back to the channel, guys. It's Jevon Light Finance, and you're back on the channel where we talk about investing and personal finance. Now, I know most of you clicked on this video just to see exactly how handsome a bald-headed and bearded man can look, and secondly, for some investing information, right? So now that you know exactly how handsome a bald-headed, bearded man can look, let's talk about some investing, right? To be precise, guys, let's talk about investing mistakes to avoid in 2024. Now, guys, if I can set the scene a little bit, it's the end of 2022. The markets finish in a bit of a downer. Cryptos crashed. NFT fell off the face of the earth. There's a lot of doom and gloom. Crypto exchanges went bust, right? Every so-called expert was predicting a recession for 2023. That was the market conditions at the time, and that is the information I personally was operating off, and I know a lot of investors was operating off that information as well. And basically that led to a lot of us hoarding cash, right? If you think the markets are going to fall, you're going to hold on to your cash and try to buy in at a better price. It makes logical sense. Unfortunately, that is one of the biggest mistakes you can make, because as we know, guys, it's now 2024, and all those experts, guess what? They were wrong. Every single one of them, because the market did not went into a recession as was predicted. The market actually went up. So what is the result of this mistake, guys? Basically, I missed out on a lot of money or a lot of returns which I would have achieved had I just stuck to the plan and keep on investing regardless of the market information I was receiving at the time, right? So I would have missed out on capital gains and I missed out on dividends. Now, guys, I haven't done the exact maths to work out exactly how much I lost, but it would be in the region of a couple hundreds somewhere, right? Simply by not sticking to the plan and investing irregardless of what everyone else is saying, right? So this mistake is a costly one. It's also compounded as well, right? Because obviously when we're investing for the long term, guys, we are really relying on compound interest to do the work for us. And if we're not reinvesting our dividends, then compound interest is not really taking hold of our investment and making and working for us, right? So it's a very costly mistake, and it's one I am hoping not to repeat in 2024, right? I know a lot of people went through this same, thought process. A lot of people, I might have even been influenced also, guys, by, people that I speak to investing about. They all had the same idea. They all had similar ideas to basically hold off a little bit, watch the market and see what happens, hold on to cash and see if you can find a reasonable or a good price to get back into the market, right? So I know I'm not the only one. Leave a comment down below if you found yourself in the same situation as well, right? But yeah, guys, it happens. It happens. We can't cry over spilled milk. All we can do is correct our mistake and keep it pushing, right? But I know for certain I'm going to try and be more disciplined this year and, just leave it to the markets and just say whatever happens, happens, right? Because when we're investing in index fund, we're investing for the long term anyway. This is not a short term thing, so we shouldn't really be too worried if the market is gonna, fall 1 year. I know we all love a bargain, we all love to reduce those average cost of the stocks that we buy or the shares that we buy. We like to reduce those costs, but we can't, hold out and try to time the market, right? Because it's not about timing the market, guys. It's about how much time we spend in the market. And if we're investing for the long term, timing the market really shouldn't be a concern for us, right? It's a very difficult thing to do. Major hedge funds and major investors, they try to time the market and they get it wrong. They get it wrong a lot of the time also, right? So it's not really something the average, index fund investor like myself should really be too concerned about, right? So it's best to just get your money into the market, forget about it if you can, and let time, let compound interest do the rest for you. All right, guys. So like the video so far if you're, if any of this makes sense to you. Um, if our let me know if I'm speaking absolute nonsense. Let me know if you try to time the market as well. Let me know how that worked out for you. You can always leave a comment down below. Like the video as well, guys, if you're enjoying it so far. So yeah, that's one of the biggest investing mistake that you can make, and you try not to do that. Anyway, guys, I'm gonna wrap this video up right here. Let me know if you guys got any value from this at all. Do not try to time the market. Try to spend as much time as possible in the market with your funds or your investment actually working for you. Peace.